Tesla destroyed earnings, and this is another reaffirmation of why we own Tesla, guys. We're going to get into everything that was said, the top line, the bottom line, what the numbers are, but most importantly, as you can see from this chart, this is the chart of Tesla, and this part right here that's highlighted in like that bluish tint is after hours, and you really didn't rally until you got into the earnings call, and it was like 20 minutes into the earnings call, and it was really based off of a couple key things. Now let's get straight into this video with some of the basic stuff first. The top line, the bottom line, the margins. And this was really the weak spot in Tesla's earnings were the free cash flow. And this says operating cash flow is down 29% from last year and down 36% from last quarter, coming in at 3.28 billion. And the best way to think about this is it used to be a lot better, but it's still really good. So it's not something that is actively working against the stock, at least in my personal opinion, especially when the stock and the deliveries are expected to grow in between 38 and 54% in 2023. So we'll talk about that a little bit later on, but that was really the worst thing you could say about Tesla earnings, is that the free cash flow was not quite what analysts were expecting. The automotive gross margins came in at 25.9%, the lowest figure in the last 5 quarters, and Elon basically chalks that up to lithium cost going up and the troubles that you've seen throughout 2022. Now, he does say that you can almost certainly expect around a 20% profit margin for 2023, just because their price cuts due to their expansionary efforts. And this is still really good. So it's like one of those things that went from super, super great to still really good. Point me out any automaker that has a 20% profit margin. You can't. That's just unheard of, right, in the industry. So it's still really good. And I don't really think it's something that will actively affect the stock unless demand somehow just went down the toilet. And what Elon said about demand is the reason why Tesla stock did rally. So we'll talk about that in just a couple of minutes. As far as the bottom line, EPS came in at $1.19 per share. We were expecting $1.13 per share, so that was better than expectations. Revenue top line was 24.32 billion versus the 24.16 billion that was expected, so roughly $150 million better on the top line than what analysts were expecting. So definitely very sizable numbers here. This is a very big company. To be growing at the rates that they are growing at and beating expectations is certainly a positive thing. But like we've seen in trading today in after hours, that is not what rallied Tesla stock. And I do have a lot of notes to go over with you guys. So we talked about the margins. That's expected to be 20% in 2023. Maybe it's better, maybe it's a little worse. I don't really think that is as important as demand and deliveries. Now, Elon did also guide for 1.8 million vehicles to be sold in 2023. Now, that would only be a 38% increase from 2022. That's still really good. And the way that Tesla stock was priced, I mean, if you just look at the stock, pull this up on a daily candlestick chart, I mean, from the all-time high at 414.50, this is more or less pricing in 50% growth rates with expanding margins with a very high P ratio. Well, you bring down the P ratio a little bit, bring down the margins a little bit, and are you really justifiably valued at $100 to drop 75%? Not really. So the expectations were pretty low heading into earnings. That's why with Elon's guidance of 38% growth in 2023, that's not all too bad. Now, what he said on the earnings call was that you could, if everything went perfect in 2022, which he doesn't think will happen. There's a lot of external factors that could happen. He talks about the war. He talks about interest rates going higher. He talks about a lot of different things on the earnings call. But he said the best could be about 2 million vehicles. Now, that would be 54% growth from the numbers that we've seen in 2022. So that would be better than their 50% projected compounded annual growth rate that Tesla has been doing and talking about for multiple years now. So he kind of lowered the bottom end range for full year guidance, but in a slightly weird way increased the top line guidance. So that was a huge thing. But what really rallied Tesla was Elon said, quote, "We are currently seeing the best start to the year that we have ever seen. That we have never seen this much demand for a start of a new year." Now, he also did say that the demand is twice as high as the production capabilities, meaning that if Tesla produces one vehicle, 2 of them are getting sold. So it looks like you might start to see a little bit of a back order here, and that's a better problem to have than none at all, right? You want to see more vehicles getting purchased, even if it takes a little bit longer to deliver those vehicles. That's a positive thing, because at that point, if Tesla can get production a little bit more efficient, even to push out, call it an extra 1,000 vehicles a day or some kind of number like that, that would be huge for full year delivery. So he also does go on to say, don't be too one-sided with this, or don't let me be too one-sided with this. He says that could change. He says we could go into a recession in 2023. The odds are not looking too good with the Fed having rates so high that could totally change, and demand could not be that strong throughout the rest of the year. But he said he's putting the demand concerns to rest, and those were his exact words. So that was very encouraging to hear. The whole reason why the stock has been falling and has fallen so much in just the last couple of months was demand concerns, and that's pretty much gone at this point. So even on the low end, 38% growth for 2023, you could make the argument that Tesla stock is still undervalued at the current levels. You could also make an argument that it's overvalued. It just depends on what growth rate you put on future years, and they reiterate 50%. That's what they're targeting. They're not going to move that long-term delivery growth rate. So that is mainly why Tesla stock did rally. They also did open a $5 billion revolving line of credit with Citi and Deutsche Bank. Deutsche Bank, I don't even know if I'm saying that right. I don't think that's a huge deal. I think investors see it as a positive thing that they have more capital at their exposure to expand if they would like to. But we didn't get any news about big expansions, right? Elon kind of dodged those questions, where the factories are going to be, when they're going to start producing the Cybertruck, even though he did say that there's only going to be little Cybertruck sales in 2023. That's more of a 2024 and 2025 thing. A lot of this information, especially with expanding the business, will be announced, at least what they indicated on the earnings call, at the Investor Day presentation, and that's going to be in March, guys. So we got a lot of things resolved with this earnings, and that's really what investors wanted to see, or at least hear how demand is doing. And that's the number one thing that we have been talking about on the channel. The only thing that investors really care about right now is demand falling off a cliff. Is it doing good? Is it great? Well, apparently it's great. Apparently the start of 2023 has been the best start to any year that Tesla has seen. And for every one vehicle they produce, 2 are being sold. So that's a good problem to have. And that definitely flies in the face of the demand concerns. And that is why The stock ended after hours up 5.51% and up in regular trading 0.38%, hitting our targeted range in between 150 to 160. The stock did close at 152.39, guys. So definitely a good thing to see. More, again, like I said, reaffirmation of why you are an investor in Tesla. Honestly, I wish the stock would come down at this point so I could buy some more at 100. That sounds a lot better than 150, but nonetheless, I will take whatever I can get. Now, let's get into some other information, kind of switch gears a little bit from Tesla. And granted, I do think this story is not over, and I think you can and will see a continuation in Tesla as long as the rest of this week is good. And it's going to come down to really the economic data at this point, because tomorrow you're going to get a lot of economic data. On Friday, you're also going to get a lot of economic data. Now, if this is your first time to the channel, thank you for being here. Hit that like button and subscribe to the channel if you guys like Tesla and you like to stay up to date with this stock as well as everything that is happening in the broad markets, earnings, data, all of that. Hit that subscribe button. Now, let's talk about the data coming out tomorrow. So what you have is durable goods orders month over month for December expected to come in at 2.2%. The reading we got in November was negative 2.1%. So you're expecting durable goods to have ramped up quite a bit in December. That data comes out at 8:30 in the morning. That's going to be the thing really throughout the rest of this week. The data is going to be king. Earnings, we got earnings out the way for this week. Earnings next week are going to be Apple, Amazon, Google. Those kind of companies, they can move the markets. They're going to be the main story next week. But for this week, it's going to be the data from this point on. Also, tomorrow, 8:30 in the morning, GDP growth rate, quarter over quarter, advanced data for Q4. You're expecting 2.7%. The last quarter reading was 3.2%, so you are expecting a lot. We'll see what happens. That's all I'm really going to say with that. Now, initial jobless claims for January 21st, I don't think this will be nearly as important as the durable goods orders unless you get a big standard deviation move. You're expecting 202,000 initial jobless claims. If this comes in at like a 2 to 3 standard deviation from what you're expecting, if it comes out at like 500,000 initial jobless claims, that's going to be super negative. That's going to be bad. Now, if it comes in 2-3 standard deviations under that, if it's super low, call it 75,000 initial jobless claims, well, that might be a bearish thing as well. So I think you really need to just see the data come in line with expectations. A big move up or down can give you a negative reaction in the markets because it can be a good and bad thing, right? Initial jobless claims not going up can lead to more inflation, at least in investors' mindsets for 2023. If it goes up too fast and you get a huge initial jobless claim surge, well, that could be bad for just economic activity, right? So you're really balancing a fine line with the economic data for this week. Now, you are also going to get on Friday, and that's going to really be it for Thursday. On Friday, you're going to get core PCE price index month over month. This is going to be the most important thing. In November, you got a 0.2% rise. You are expecting a 0.1% rise for December, so you're expecting core PCE to continue to go down. Personal income month over month for December is expected to rise to 0.3%. That would be a decline from November when it came in at 0.4%. And personal spending month over month is expected to decline from November's levels that we've seen of 0.1% of a gain to a negative 0.1% in December. So you are expecting economic data not to look so good, but you're also expecting inflation to continue to come down. That PC can be a little bit stickier, so we'll see what happens with that on Friday as well, guys. So as you can tell, a lot of important data throughout the rest of this week. And really, just to circle back on Tesla briefly, this move in after hours could just be the start of something much bigger. We're going to have to see how analysts digest this information. We've had very little commentary or price prediction changes or analyst targets, I should say, changes since Tesla earnings. Tomorrow, you're going to get a lot of updates from analysts, and that could definitely be one of the main driving factors for Tesla. If you see a lot of upgrades and you see people increasing their price targets, well, that's going to be a positive thing, and that's what gives you a lot of those continuation rallies, especially after earnings, guys. But we might be a little bit handicapped to the data. Keep that in mind as well. If the data comes out really bad and the markets are in the toilet, I think Tesla will still perform well, but maybe not to the same extent it otherwise would if we didn't have data or if the data was bullish. Now, if we take a look at Tesla on the charts, we've obviously rallied quite a bit, but you're still down a bunch from where you were at even in September or even where you were in December when Tesla was around a $200 stock. So I think if all things do go well, you could easily approach that $200 level. I think you could really see some big candles from here. We've seen pretty small candles relative to what we've seen in the past, and I do think that could give us a move higher. You're also getting a technical indicator as of yesterday of a head and shoulders bottom, and that is a bullish indicator. You're also seeing the CCI flashing into positive territory. You've seen that indicator twice come on. A momentum indicator, a triple moving average crossover. All of these are bullish indicators, and a short-term KST indicator as well, guys. If we do go ahead and pull up a couple of my favorite indicators like the MACD and obviously the moving averages, but the RSI is the relative strength index, and it's sitting at 56.57. I don't think you guys could see this. I think my face is over it, but overbought is over 70, oversold is under 30. You're at 56, so you're a little bit over neutral, that neutral level of 50, but you're not to 70. You're not overextended to the upside, even though you have rallied quite a bit, but you're definitely not in oversold territory anymore. Now, as far as the RSI, you are approaching a positive level, and this one you might be able to see a little bit better. I'll scroll it over. And just this line right here, this equilibrium where you get green, you get red, this middle point might be hard to see from your guys' perspective, is this bullish or bearish weighted moving average price. So what you're seeing here is this yellow line and the blue line. Essentially, when the yellow line is above the blue line, that is bullish. But when both of these are above this neutral level, that is extremely bullish, or at least showing you a lot of bullish sentiment. You're not at that neutral level yet. You're not at this middle line yet, but the yellow line is above the blue line. So from what the MACD is trying to tell you is that you could see a lot more relative strength for at least a couple more days, if not a couple more weeks, coming out of Tesla. And it's showing you that the volume here is still not more bullish than bearish. So that is basically it for this video. There's not too much else to actually say. I think we did go over a lot. Leave your comments, questions, or concerns down below in the comment section. Like the video and subscribe to the channel if you have not already, or if you learned anything at all. You guys enjoy the rest of your day, and I will see you in the next one.